In a world where global economies are wobbling between inflation fears and growth ambitions, Japan is quietly crafting a strategy that could redefine not only its future, but also the balance of economic power in Asia. For years, Japan has been labeled an economic giant caught in stagnation. However, 2025 may mark the country's long-awaited revival. With its stock market reaching record highs and a new wave of pro-growth policies under the government of Sanae Takaichi, Japan appears ready to reclaim its lost momentum. At the heart of this transformation is a strategic mix of fiscal flexibility, wage growth, and corporate reform, a combination economists are calling Japan's new economic playbook. Unlike the aggressive fiscal tightening seen in the US and Europe, Japan is choosing a measured expansionary path. Prime Minister Takaichi's administration is focused on stimulating domestic demand while maintaining control over public debt, a delicate balance for a nation already burdened with the world's highest debt-to-GDP ratio. The goal is clear: boost spending power without triggering runaway inflation. Japan plans to achieve this through targeted investments in green energy, digital innovation, and defense, sectors that promise long-term economic resilience. For decades, Japan's biggest economic weakness wasn't production, it was stagnant wages. Now, after years of corporate hesitancy, companies are being encouraged and pressured to raise pay scales. The government's new incentives aim to link corporate tax breaks with wage increases, ensuring that the benefits of Japan's growth reach ordinary households. Rising wages could finally ignite the consumer spending Japan has long struggled to revive. Japan's stock market, particularly the Nikkei 225, has surged to record levels, not just because of global trends, but due to deep structural reforms. The Tokyo Stock Exchange's campaign to make companies more transparent, profitable, and investor-friendly has started paying off. Foreign investors are showing renewed confidence, viewing Japan as Asia's stable alternative amid China's slowing growth and geopolitical tensions. Japan's central bank, under new leadership, is maintaining a soft yen policy to keep exports competitive. A weaker yen boosts profits for Japanese giants like Toyota, Sony, and Mitsubishi, helping them expand abroad while bringing foreign capital back into the country. Yet this strategy isn't without risks. It raises import costs, particularly for energy, meaning Japan's economic planners must tread carefully to avoid inflationary backlash. No economic playbook is complete without addressing Japan's most pressing challenge: its aging population. The 2025 plan includes measures to increase workforce participation, especially among women and retirees, while encouraging AI and robotics innovation to offset labor shortages. If Japan successfully merges human capital and technology, it could set a model for other aging economies worldwide. Japan's 2025 economic strategy is more than a short-term growth plan. It's a blueprint for sustainable revival. By balancing fiscal responsibility, wage-led growth, corporate reform, and technological innovation, Japan is signaling that it's not just surviving, it's evolving. In an era when many nations are still struggling to find their post-pandemic footing, Japan's economic playbook might just become the new manual for modern resilience.